session of GST Aap ke liye. With the country getting ready to a new taxation regime with the implementation of GST, we are starting this talk show today with India's leading tax experts to get deeper insights and perspectives on GST. Today we have with us Mr. Jatin Christopher, who's a leading expert on indirect taxes in the country. Welcome, Jatin. It's good having you here. So if you look at what we've been doing as Tally also, and the reach the small businesses have to consultants and experts like you, it's a little difficult, towards which I think we are making our effort to get to the last mile and let people understand how their businesses will be affected in the GST regime. So one of the most important topics with regard to traders or even the smaller businesses is inventory. Right? I mean, how do I transition into the new GST regime? How do I need to manage inventory? What do I need to do with my branch offices? With my, how do I handle CFAs? How do I handle my agents and things of that sort? If you can start off initially with a high level kind of understanding as to what SMEs need to be aware of with regard to inventory management, it'll help.
Sure. You're very right. Inventory management is one of the significant areas of transition into GST. Two things for us to be mindful of regarding inventory management in relation to GST. One is that there is no one-to-one correlation that will be expected as far as inventory and credit related to inventory is concerned. Whatever is the inventory, that will move over and make this transition into GST. Likewise, whatever is the closing balance of credit on the last day of the current tax regime will transition. A word of caution here, just because we have liberally availed credits under the current tax regime does not automatically grant us any immunity from questions or inquiry into that closing balance. This inquiry will happen long after GST has been implemented. So when we have any questions raised tomorrow, then the doubtful taxes, credits that we may have availed will become recoverable in cash. So one of the good things to consider is sanitizing the closing balance of credits so that when we transition into GST, we will have no risk associated with the transition balance of credit.
So what you're basically saying is keep your books in order, make sure that you can explain whatever credits you've taken at any point of time to any officer who comes down.
Absolutely. The transition provisions in both 167 and 169, when we look at, there's an expectation that we will need to justify what credit has been carried over either in 167 or the new credits that we had claimed under 169. So both of that, we can't wait until GST has already been implemented. Advanced preparation is the key.
Interesting. I think there is lot has been spoken and said about one nation, one tax, doing away with the tolls between the states, doing away with all the checking that used to happen. A lot has also been spoken about getting your entire warehouse management in place, getting your entire logistics in place and things of that sort. So how would that impact a small businessman? For example, a small businessman could probably be doing business in two states, or he may be a job worker sitting out of Hosur, but then the client may be sitting out of Bangalore. These are, I mean, these guys are small businesses, but they need to comply with the law. If you could take out a few examples around how it will impact the small businesses here, what they need to really worry around, whether they need to continue having branches outside, because we always had this thing of branch transfers, Form Fs to CST and things of the sort. How will that overall impact come in?
You're right, Satya. We have put in place a certain business model for distribution based on the efficiencies in the current tax regime. What we must bear in mind is the current tax regime is a origin based tax, whereas GST will be a destination based tax. Whether we have set up branches in Hosur, we have warehouses in different locations, are all a response to a tax opportunity that presented itself under the current tax regime. When the current tax regime itself is going away, the business model that we have put in place for distribution and supply chain will reach end of life when GST is introduced. So we have to rethink the appropriate and the efficient distribution model that we need in GST and put that in place. And if in making this transition there is some redundancy, then that is something that we will have to swallow and put in place what best serves our interests in this new tax regime.
So would that be a plus or a minus for a business as such?
Again, my belief is that since we had responded under the current tax regime to opportunities to improve profitability or to bring the landed cost to a customer to the optimal levels, GST also presents similar opportunities. Broadly, GST is designed to bring a reduction in costs because of the efficiencies and the removal of cascading effect. And if we are to realize the full benefit of GST, we will definitely see that any incremental costs we may incur in reorganizing our supply chain and distribution structure will only be a temporary cost, and the payback will be far greater over the long term.
So let's talk about sales return. I mean, we are used to the present system of sales return. Would anything change in GST? Is there something I need to make sure that my input credit does not go away and things of the sort? Let's take it separately for goods and services, because I think there is also some confusion that can I return services? There has been some talk around that whole thing. Would input credit be reversed for that and things of the sort? If we can get a little bit in detail on that.
Sure. First of all, let's bear in mind that goods and services in GST are classified a little differently from the way we have currently understood them to be. We understand what goods are from the definition. We understand what services are. Services in GST is anything other than goods. So therefore, if you look at Schedule 2, it provides for taxing transactions involving goods as if they were services. So at the first instance, we will have to determine whether we are looking at goods or goods treated as services or services themselves. From there on, if you look at returns, transactions involving goods are permitted to be returned, and there is a provision, section 31, dealing with how those returns need to be addressed. As a plain vanilla sales return, the law permits credit note to be issued by the supplying taxable person to reverse the goods being returned. But business currently is looking at giving a very efficient and seamless user experience. So therefore, returns are permitted not only in the place where the purchase was made, but at any location nearest to the customer. So these provisions are not straightaway provided for in section 31. If you return the goods where you purchased them from, credit note can be issued and the return recognized. But if you return them in any other location, the other location where returns are accepted may be within the same state, or it can be in a different state. These are the areas where specifically we will need to go into deciding what the structure of the return should be, whether the person receiving the returns is acting as an agent of the original supplier or not. Secondly, when you look at services, like I mentioned in the beginning, goods treated as services or services themselves. Where you have goods treated as services, the returns will operate in similar manner. But where you have services simpliciter, there is no question of return. It's only a question of whether the customer will pay for the services provided or not. A word of caution here: where supplies have taken place but payment is not realized, that's bad debt. That's not returns. Very often, bad debt is interchangeably used with returns, particularly in the case of services. Bad debts, there is no remedy. The tax has to be paid because government will not join hands in case the receivable turns bad.
if you look at Tally, for example, right? So we have a concept called Tally software service, okay, where we give coupons, where we sell coupons. This is service coupons, okay, which can be redeemed against your license number. And what happens after that is for a year or 2 years or whatever the coupon says, you are entitled for a service. At some point of time, say I've sold a coupon to you and you return it back. Okay. Would it be in the same way I do for goods, or should I consider it differently, or how will that?
See, when you look at coupons, we'll have to recognize that are coupons a taxable commodity in themselves, or is it merely a prepayment for an underlying service which has a separate classification? In my view, coupons can either be a payment instrument under the Payment and Settlement Systems Act of 2007, or it can merely be a record of a advance having been received with a certain validity for its redemption. Section 13(4) deals with situations like this, where coupons by themselves don't form a taxable commodity. It's only the time of payment of tax will be determined at the time of issue of the coupon. Otherwise, coupons should not be looked at as a standalone commodity independent of the service that Tally provides to.
Got it. Got it. So what you're saying is, even if I buy a coupon and I return it, it should not matter.
Absolutely.
Unless the service is actually not being provided.
But if you look at GST regarding the time of supply, it talks about payment or provision of service, whichever is earlier. So if you have an instance where a customer pays money, gets a coupon, but does not come forward to redeem, then there is still a supply incident because of payment having been collected, although there was no redemption. So therefore, those instances also have to be kept in mind.
What if he buys it and then returns it?
Again, in a return of a coupon, let us say the terms of your issue of coupon allows them to return and they get a full refund, then those cases, the supply has not yet taken place. The underlying supply is still pending. It's only in advance that is being settled. Therefore, you should be entitled to make a reversal.
Interesting. I think this brings in quite a bit of clarity.
I just want to add a word of caution here. We need to distinguish between actionable claim versus coupon, because a lot of debate has been going on surrounding the question of actionable claim in courts in the recent past, whether it's food coupons or prepaid cards and so on. Actionable claims have historically been kept out of VAT. Alright, but now in GST, actionable claims are being specifically brought into GST. Therefore, we will need to learn more, understand better what actionable claims are, because money and transactions in money are neither goods nor services. And money has been defined not only legal tender, but anything that is approved by the Reserve Bank. So whenever we have a prepaid instrument that's approved by Reserve Bank, then that will also fall outside the scope of GST. So therefore, we will need to distinguish between actionable claims and coupons.
Many of these SMEs are either job workers or they may also be agents. They were working in a particular way in the VAT or a pre-GST regime. How will things change in the GST regime? What are things that they need to be aware of, or be worried about, or be mindful of, so that they become compliant? I mean, I think compliance is the key here, right? I mean,
see, we'll treat each of these groups of businesses separately: agents and job workers. As regards agents, agents were either responsible for procuring goods for their principal or supplying goods to customers representing their principals. Transactions between the principal and the agent were not taxable until now. GST in Schedule 1 makes a fiction, brings about a fiction to say that the transactions between the principal and the agent is also a supply. So what happens is, in GST, we expect that financially transactions will not look any different as it was in the past. for example, industries like pharma or FMCG, etc., where they extensively use a network of CFAs and stockists and so on who act on behalf of the principal. There, financially, the transactions will not undergo change, but due to this fiction in Schedule 1, we will need to recognize the transactions inter se as a supply. So, the agents who are representing principals need to first see whether they come within the operation of this fiction, and if they do, they need to treat the receipt of material as a purchase liable for GST in the hands of the principal, and then their onward distribution as a supply liable for GST. As regards job work, it is a matter that the job worker and the principal for whom they are doing job working, they need to sit together and determine how does the principal wish to comply with job working provisions of GST, because GST offers seemingly one option for operating under the job working system, where the principal will be entitled to supply goods for job work without payment of GST, provided the job worked material is returned back to him and so on. It is also possible for the principal to opt out of this system. Instead of claiming this exemption, he can opt to charge tax, supply it to the job worker, who without any restrictions on time is able to convert and impose GST when he returns the material back to the principal. So, within job working or out of job working, those options are available. So, it is for both of them to sit together and work out. During transition, they need to focus on who will claim credit of the material in stock, and after transition, they will need to examine which option provides them the most efficient way of functioning.
Makes sense. I think that gives a lot of clarity actually. Speaking about this, I think let's come into a more touchy topic of related party. I think that is something that has dogged the entire accounting fraternity and also the taxation fraternity, and especially the small businesses. I mean, it's just a matter of normal working that we both know each other. I'll get work done through you. I don't even know if we're related parties. How hard will this related party, whether it's disclosure or whether it's transactions with related party, how hard will that hit the small businesses?
See, taxation of transactions involving related parties has not been scrutinized with the level of detail that we expect in the future compared to how it has been so far. We just need to be prepared. First of all, if we believe that there is transparency in our transactions, we have no reason to be concerned that GST will empower the administration to be very aggressive and do some high-handed things based on the valuation provisions regarding related parties. Key things to bear in mind in transactions with related parties is the way the valuation provisions of transaction value has been laid out. If the transaction is between related parties, then the transaction price is disqualified. Whatever you offer as the transaction value will not be acceptable readily. Based on our experience of having looked at such transactions in customs, we will find that the experience is not going to be very difficult to go through to demonstrate that the relationship has not influenced the price. When we have transactions with related parties as well as contemporaneous price with unrelated parties, then we have a lot of evidence on record to say what is the correctness of the price that has been followed. Although we don't have valuation rules just yet, we expect that there will be valuation rules laying down what is an appropriate method of valuing transactions between related parties.
I think that's good. We again, the dealers, if you may call, or the small traders, uh, they're used to getting these schemes or these freebies or non-monetary stuff that they keep getting from the principals. Say for example, someone says buy a dozen shoes and you'll get one shoe free. Um, uh, how should the small guys, I mean, if you look at the bigger ones, they are aware of what accounting standards say, what the what the provisions of tax are, but what are things that a small business needs to be aware when he receives these kind of things, whether from an OEM or a manufacturer.
Uh, I've heard a lot of things being said about these free supplies and so on. It's a very valid point you're making. Small businesses, medium businesses need to bear in mind that their larger principals are accustomed to incentivizing their transactions by supplying at no charge. Whenever we hear something free, we have to quickly bear in mind that under the contract law, nothing can be given for free. All right, you always have to get something when you give something, otherwise the contract is void ab initio. So when you look at transactions where you have free articles involved, let's bear in mind that it's not free, it's only having no monetary consideration. So we know the value of what is being given free. When you have these incentives in kind, there is a value that can be ascribed to the non-monetary consideration that is received, and GST requires that even non-monetary consideration be recognized. And when we have such incentives in kind being given, it may not just be one supply, it may be two supplies, one for services being provided, the other for the article making up the incentive being given to the dealer.
There's a tax that needs to be attributed to the
Absolutely.
part of whatever, and then that's how a small business needs to also account for it.
Absolutely.
Okay. So what happens in cases of EOUs, SEZs? Because they're sitting on a lot of shops. There are rules around how I need to supply, what a small guy needs to be aware of. There is some confusion on what GST will be charged on SEZs, EOUs. Are they going to be in the purview, not in purview? If some more clarity on that front can be given.
Absolutely. I've spoken with a good number of EOUs and SEZ units, and I know that they have a lot of confusion themselves about whether when they buy goods and services, should the supplier charge them GST or not. Let's make certain things very clear. Let's differentiate between SEZ and EOUs. As regards SEZ, all supplies to an SEZ is an IGST supply. Okay. So if you have a SEZ unit in Bangalore and a supplier also in Bangalore, the transaction between the two of them is treated as an interstate supply, liable to IGST. As regards other EOUs are concerned, it will be treated based on whether it is an interstate or an intrastate supply. That's the first point of distinction to bear in mind. Next, exemption is the antithesis of GST. Nobody will get exemptions. If you get an exemption, the reason is if you get an exemption, you will disrupt the GST continuum. And when there is this disruption, the chain will have to restart all over again, and that will cause tremendous amount of cascading in taxation. So nobody will get exemptions. SEZ needs to pay IGST when they buy goods and services and claim a refund. EOUs have to pay GST when they buy goods and services and then go and claim refund. Currently, EOUs are used to claim and SEZs are used to claiming refund of service tax, but excise duty they enjoy ab initio exemption. In GST, although supplies to SEZ is called a zero rated supply, the exemption is by way of refund. So we have to bear in mind that as a small and medium business enterprise, when I have a customer who is either an SEZ unit or a EOU, I will have to charge them GST in the normal course. If it is an SEZ unit, it is always IGST. If it is an EOU, it is an interstate or an intrastate supply depending on how it has to apply. All exemptions will be by way of refund, and the customer who is the SEZ or the EOU has the responsibility to claim the refund. As far as the supplier is concerned, full taxes need to be charged. No exemptions on those supplies.
I think that helps a lot. When we were speaking, you spoke about refund. Okay. So many of these small guys are also situated in one of these SEZs or EOUs kind of a thing. So, what are things that need to be borne in mind when you need to get refunds or when you apply for refunds? Does it happen immediately? Would a part of it be given immediately and a part of it later, or what is the scrutiny that will happen for a refund to be granted?
All right. This is very important for us to bear in mind. Three things are important for anyone who's hoping to claim refund of tax from the government. One is timeliness of the application. An application is an application that's complete in all respects, because we have to be responsible for our part of the requirements in the law. A complete application needs to be filed within time, and the proof of unjust enrichment has to be established. And third thing is that we need to have complied with the conditions qualifying for the refund. If these three things are kept in mind, there is no, one need not entertain any concern about whether that refund will actually be received. In fact, I've seen some very bold provisions in the law stating that refunds will be granted with a time limit of 60 days. The officer is duty bound to dispose of a refund application within 60 days. Furthermore, if the application is not disposed of within 60 days, government is responsible for paying interest on the delay in refund. Never before have we seen the government come forward with such clear guidelines laid down as to how they will take responsibility for returning money, and this is a welcome measure. If we are responsible, we are willing to take our responsibility seriously, the government will reciprocate that with equal seriousness.
So how do the small guys need to register? Is there something the SMEs need to be aware of? Is there some kind of an advantage that can be taken at this point of time? How do I register? Is there something that I need to be aware of?
Absolutely. See, registration is not a clerical task in GST. Registration is one of the irreversible steps of planning in GST. So, like I mentioned earlier, the business model that we have put in place will reach end of life. We have to come up with a new business model that is aligned with the principles of GST. If we keep that in mind, we will now know where to register and where not to register. We have to identify because every state will be a distinct person as far as GST is concerned. So, registration is an important aspect. We have to align it with the way we want to distribute in GST and accordingly take registration. Next is the kind of registration we would like to take, whether as composition taxable person or regular. There also much thought is required to be given before we make this decision. It has to be taken consciously so that we reap the benefits that GST promises to bring.
Glad we spoke about registration, we spoke about SEZs. There is also this concept of composition which comes in between, right? And what happens when composition there is a composite dealer who's working with SEZs and exports also. So, is there something that because that's like putting too many things into one basket.
See, composition, the scheme itself has certain disqualifications. Interstate supply is a disqualification for a composition taxable person, for the option of composition. So, anyone supplying goods to an SEZ, like we've seen earlier, is an interstate supply. Exports is an interstate supply. So, therefore, a composition, the option of composition is not available to any taxable person who supplies to an SEZ unit or undertakes exports. Even if it is a small value of these kinds of opportunities, it will disqualify him from the rest of the for the rest of his business. The obvious answer lies in multiple entities being put in place to undertake these kinds of transactions without disturbing the composition option for the rest of their domestic business.
So let's come back. I mean, there has been talk around. I mean, we started with inventory, we moved on. There is also this concept of rating of businesses, compliance rating. I think that is something a lot of people are worried about, people are happy about. So how should we read into this rating? I mean, wouldn't government be getting too much into how and why we do things? I mean, are they getting really into what we actually want to do?
See, like our emails and the use of social media, we have signed off a lot of our privacy, and we are blissfully ignorant about how much people know about us, or one can come to know about us. I suppose no one's complaining about it because that's the way they mine data, and business intelligence revolves around these kinds of concepts. And government doesn't want to be left behind in identifying potential perpetrators. GST rating, I think, I've never heard of something like this uh, being introduced in tax administration. So therefore, I think this GST rating is something that we should all take very seriously, because uh, it could become one of the pre-qualifying criteria for vendor evaluation. As small and medium business enterprises, we should not allow our GST rating to be adversely affected because of any delay in depositing taxes that is due from us or from our suppliers. If a supplier defaults in tax, not only will the supplier have his GST rating affected, but also those who buy goods from such defaulting suppliers. So this system, I think, will clean up a lot of delinquencies that can potentially be present in business, where dealers vanish, having charged tax, having given tax invoices, but not having deposited tax with the government. In the recent past, we have seen a spate of cases where whether courts have had to answer the question, how can this responsibility be placed on a customer for compliance with taxes by the supplier? GST is making no bones about it. They're saying, yes, it is a responsibility that the two transacting parties need to shoulder. So as a business, and if we are diligent and looking at the long term, we have to be mindful of what our GST rating is going to be, and not let that get adversely affected by our own defaults or defaults by our suppliers.
So just to corroborate this, I think I was hearing in a corridor talk where the fintech companies and the financial the guys who give finance to small businesses, they're like waiting for this opportunity because they know that if the small businesses default in paying taxes, they won't be existing anymore, and they will have to run to these finance companies to ensure that they get the money to pay the taxes.
See, I think default in tax payments is not a outcome of the business transaction. It's a conscious, many times it is a conscious step, and if there are these kinds of consequences, I think the delinquencies will come down greatly. It's not going to be anti small businesses. In fact, it's going to be pro small businesses as long as they are diligent in compliance with GST. Embracing technology, India has not been far behind. If there's a need, we will learn. Isn't it surprising to see vegetable vendors carrying cell phones? Today they have smartphones, they send you messages. So therefore, why should we be left behind?
Absolutely. So we spoke about started with inventory, moved to registrations, to a lot of things about SCZs, how things are working. So what is going to happen on July 1st? I think it looks like it's the D-Day. What are say 5 things that businesses need to be aware of when they move into the new tax regime, which probably is going to happen once in a lifetime?
Yeah, you're right. This is a never before opportunity for those who are diligent about their businesses to get ready. And I think if July 1 is the due date, on July 1st, nothing will happen on July 1st. Everything that is to happen will have already happened. Our businesses would have got reorganized. We would have validated our closing credits to make sure we're able to claim it. Credits that we were not eligible to claim under the current law, but we will be eligible in the new law. We will have already validated them and got that ready. we would have put together a technology solution, and Tally has a big role to be an enabler in that space. We would have put together a technology solution that is commensurate with our requirements, and an oversight would have been assigned to all of these things, because it will help us stay in business or exit the business in GST.
It was wonderful talking to you, Jatin. I think you've given us a lot of insight. I think small businesses will be really happy listening to a lot of stuff that you told, and hopefully get their mind clearer about how they need to move into the new taxation regime. I think a lot of fear has also been put into the market, telling that okay, there's a new taxation coming, but I don't think it's something that people need to be so worried about, because there are a lot of people trying to help. There are a lot of solutions that are there. There are a lot of companies, a lot of camps happening. Government is doing their bit. I think it's important that as citizens of the country, we we help with this entire transition into the new regime. Once again, thank you for being a part of this journey with us. We are doing this journey with a lot of senior chartered accountants like yourself, and we hope to bring in a lot more insight to people viewing this, and we will ensure that next time around we will get again some more topics of interest that are going to change your business. Thank you. In this session, we spoke about a specific aspect, which was inventory, but we also went a little free flowing on a lot of aspects concerning small businesses. We hope you found this useful. We will be interviewing a lot more experts as we transition into GST. For more information, you can visit our CA community website, where we have discussions, news, and other videos, and we hope you find them useful. Thank you.